Welcome back to the Neuro Finance Masterclass. Today, on day 108, we reveal the absolute holy grail of crypto cycle timing. I'm Ibrahim, and I'm here with my co-host. If you've been grinding with us through phase 2, you already know our core mission. We're stripping away the noise, the hype, and we're zoning in on pure structural truth. Today's explainer is all about the macro compass. We're getting hyper-focused on the MVRV ratio to track the blockchain's real, literal cost basis. Let's get into it. Here's the roadmap for today's intense curriculum. We've got 5 pillars to cover. The holy grail of timing, distinguishing market cap versus realized cap, decoding the exact MVRV formula, mastering those sovereign macro thresholds, and finally, executing your cycle audit. We're going to elevate you from an emotional amateur to a precise, data-driven architect. All right, kicking things off with Section 1, the holy grail of timing, moving beyond the visual top. So, yesterday, on day 107 of our journey to financial freedom, we nailed down corporate enterprise valuation. Remember that EV to EBITDA breakdown? Today, we are conquering crypto's absolute hardest, most unforgiving boss level, timing the multi-year macro cycles. You know what the amateurs do, right? They stare at a chart, they see this steep, massive green candle during a raging bull run, they scream infinity, and they literally buy the exact top. It's just pure, unfiltered emotion.
Oh, 100%. But the architect? The architect completely ignores that visual price action. We don't care about the chart's shape. Instead, we anchor our neurofitness to one single unmaskable metric on the blockchain, the MVRV ratio.
Which brings us perfectly to Section 2, market cap versus realized cap, finding the structural truth. Okay, to actually master the MVRV, we have to completely shatter the illusion of standard valuation. Let's start with the one you see everywhere, market cap. You know the drill, it's just the current price of Bitcoin multiplied by the total supply sitting out there. But listen to me clearly on this. This is a purely superficial valuation. It's that shiny paper wealth number plastered on every mainstream finance site. And you know what it does? It tricks the masses right into buying wildly overextended markets. Exactly. Now contrast that illusion with realized value, or realized cap. Instead of just slapping today's imaginary price tag on every single coin, realized cap values each individual coin based on the exact price it was last moved between wallets. Think of it like the aggregate on-chain cost basis of the entire market. It's telling you down to the exact dollar how much physical hard cash investors actually poured in to get those coins. Right, so when you put these two side by side, the difference is absolutely massive. Market value is superficial paper wealth built on the last traded price, while realized value is the actual aggregate physical cash invested into the network. Comparing these two is the absolute key. It strips away the mirage of current price and shows you the hard architectural reality of the blockchain's true cost basis. Moving right along, Section 3, decoding the MVRV formula, the math behind the magic. So, now that we've got those two distinct caps locked in, let's look at the mathematical cheat code that merges them into a single sovereign indicator. It's beautifully simple. The MVRV ratio equals market capitalization divided by realized capitalization. That's it. But what it does is perfectly measure exactly how much profit the market is currently hoarding relative to its actual hard cost basis. Let's put that into perspective. Think about the power of the number 3.0. If the MVRV is sitting right at 3.0, it means the current market value is exactly 3 times higher than the actual price people paid for their coins. The market, as a whole, is sitting on a staggering 3x unrealized profit. That is a massive premium. Now for the fun part. Section 4, the sovereign macro thresholds, the architect's blueprint. All right, this is where all that theory transforms into deeply empowering action. Historically, across every single Bitcoin halving cycle, going all the way back to our analysis on day 97, this ratio has respected mathematical boundaries with honestly shocking precision. The first boundary you need to memorize right now is the danger zone. That's an MVRV greater than 3.7. When this ratio spikes above 3.7, current market prices are drastically, violently overextended. People are sitting on astronomical, unrealized paper profits, and it creates this highly unsustainable state of extreme euphoria. And what happens when those astronomical paper profits peak? It triggers the whales. They start systematically scaling out into stablecoins. Remember our lesson from day 102? And MVRV above 3.7 is the historical flag for extreme overvaluation. It's the absolute macrocycle top. This is exactly where the smart money quietly exits. And the retail crowd? Well, they get left holding the bag. Okay, let's pivot to the total opposite extreme, an MVRV below 1.0. This is the generational floor. When this ratio drops below 1.0, it literally means the market cap is lower than the realized cap. Let that sink in for a second. The entire market is structurally underwater. The aggregate market is actually holding an unrealized loss. And the psychological state down there, it is pure, unadulterated fear. Retail panics, they capitulate, they completely surrender. But the architect sees something completely different. The architect knows this is the ultimate generational bottom. It is a moment of extreme undervaluation. It's the absolute maximum opportunity to step in and build real wealth. So, let's summarize this macro compass because it's absolutely crucial. Notice how precisely human emotion maps directly to mathematical thresholds, and more importantly, how it dictates sovereign action. An NVRV above 3.7 means extreme euphoria. The action? The architect scales out to stablecoins.
Exactly. And an MVRV below 1.0 means full-blown retail capitulation. The action? The architect accumulates at the generational bottom. No guessing, no hoping, just your definitive roadmap.
Bringing it all home. Section 5, Mastering Your Cycle Audit, Your Cognitive Task. All right, it's time to take everything we've just learned and shift from theory into immediate, practical action. This is your homework for today's explainer. Here is your literal blueprint to detach from the sheer chaos of visual price action. Step 1, open an on-chain data suite right now. We're talking professional tools like Glassnode, CryptoQuant, or Look into Bitcoin. Step 2, search for the Bitcoin MVRV ratio or the MVRV Z-score chart. Step 3, audit that realized cost basis against the thresholds we just discussed and carefully calibrate your personal margin of safety. Guys, you have to stop trading based on fear or greed. Stop reacting to every single green and red candle like an emotional amateur. By anchoring your decisions to the hard, unmaskable on-chain cost basis, you start thinking and, more importantly, executing like an architect. You take back control. You rule the cycle. So, we're going to leave you with this final provocative challenge. Go look at the data today. Ask yourself, is the MVRV right now scraping the capitulation floor? Is it entering extreme euphoria? Or is it just coasting through a healthy middle expansion phase?
Go pull up that on-chain data right now. Discover the structural truth for yourself, and we will see you in the next explainer.